Well, in interest of time, we're going to be moving forward. Ladies and gentlemen, this discussion will center into the realm of digital public goods, unraveling India's path towards forging an inclusive payment strategy that fosters equity and progress for all through our next topic in the discussion, which is digital public goods. How can India craft an equitable payment strategy? First up, for our moderator, we've got Ms. Aditi Trivedi, Incharge Strategy and Market Development, NBBL, National Payments Corporation of India. Let's give our lady a warm round of applause whilst as we welcome her. Thank you, Ms. Trivedi, for joining us today. Next up, joining Ms. Aditi on the stage are our eminent panelists. First up, our General Manager, DPSS Reserve Bank of India, Shri K. Vijayakumar. Let's give our gentleman a warm round of applause. Thank you, sir, for joining us. Vice President, Consumer Platform and Payments, PhonePe, Ms. Sonika Chandra. Thank you, Ms. Chandra, for joining us. Co-founder and CEO SETU, Mr. Sahil Kini. Thank you, Mr. Kini, for joining us. Executive Vice President, Head, Cash Management, Commercial Cards and International Banking, Axis Bank, Mr. Sunil Kamath. Wow, that's quite an applause, Mr. Kamath, right there. And CEO, M1 Exchange, Mr. Sundeep Mohindru. Let's give Mr. Mohindru a big round of applause. With that, ladies and gentlemen, welcome back, and it's in the able hands of Ms. Aditi to take it forward.
Thank you very much. A very warm welcome and good afternoon to everyone. Thank you for turning up for this event. And as in the interest of time, we'll probably start really quickly. And as we all are aware, that we are here for a discussion on digital public goods. So when we talk about digital public goods, one of the biggest element which we see is what is happening as a platformization of every domain economic activity. The cultural activities which were happening, the traditional economic activities, they all are turning into a big tech platformization of these activities. So I'd like to quote someone I recently read about from iSpirit. I was reading a research paper, and they said that government of Norway has very categorically defined technologies and content with licensing and design, which is scalable, which allows innovation to be called as digital public goods. And with that context, I'd like to move forward and understand from Vijay sir. So from your perspective, what would you say that public goods in the country are, and how would you say that they have impacted our country and our citizens across?
Just like the definition you had given, digital public good is defined as actually an open source and interoperable system which has its own governance arrangement in place. So if I look from the payment sphere, we do have the development started with Aadhaar, and then you have an UPI, which is actually an open platform where you have not only the participants right from non-banks and banks and the fintechs coming in. And you also have the account aggregators actually which are coming up. So we see that actually a lot of developments have been happening. So it's just not started this thing, that it has been a gradual step, right? Starting from the Aadhaar and slowly moving towards it. It has been a decade of steps, and now we are in a better position. And the evolving the fintech scenario in India is actually thanks to what has happened during the last decade. I think that's the stage we have. What we see, the development of the payment systems, in the transactions in UPI and all.
Yes, for sure. So fintech, of course, have evolved a lot, and thanks to the platforms which we have. But I think banks have also done a lot of work. Sunil, if you could actually throw some light on that banks have also done a lot of work in creating and getting these platforms across to the citizens of the country.
Yeah, So Nedita, before we get into the public good, I just want to take a step back, right? If you look at 2016, and that has context to what I'm going to say on the impact of banks, right? It has been a very defining moment because I think there was some a few events, right, which really triggered to what India is today, right? I think number one, UPI got launched in 2016, right? Aadhaar touched almost a billion population, right? Then the demonetization came in, and then geo network came into picture, right? So if you look at from a banking standpoint, all these four events had a major impact to what we see today on the digitization. Let's take UPI for example, right? UPI today, Mr. Kasbe mentioned it has touched. We are talking about 10 billion transactions in a month, right? Which is flowing. It's a huge fillip, right, to the entire digitization. Number one, because if you look at from a consumer point of view, right, you're talking about, individuals now having a digital footprint. We are talking about individual having a digital capital, right? And that is helping banks, in terms of providing access to credit. I think that's a big takeaway. I think with Jio launching in 2016, what happened was there was competition among the telcos, right? Jio had a very aggressive plan. And with Aadhaar reaching the masses, the entire eKYC came into picture. So your entire onboarding became digitized, right? And what that really helped was the cost of acquisition, the cost of acquiring a customer came down for the banks, right? Not just for the banks, but also for the fintechs. So that had a very huge impact. Your cost came down, your turnaround came down, and Jio was able to issue SIM cards, in minutes, to the consumer, and that really led to, mobile app being used, UPI getting, and then came the demonetization, right? So what demonetization and then, Jio did was all about, and then COVID struck, and then today if you look at, we are talking about almost 10 billion transactions on UPI, you're talking about almost 300 million users, you're talking about 50 million merchants accepting QR codes. That's a huge fillip, right, for the India Inc. when we talk about digitization, right? So from a banking standpoint, right, one, the Aadhaar KYC has simplified the entire onboarding journey when we talk about customer acquisition and account opening is concerned. I think UPI has gone international. We are talking about, our finance minister spoke about almost 100 billion, right, of receivables coming in terms of remittance into India, right? So the UPI corridor, which is being worked upon, that has got a big impact, right? UPI again, UPI Mapper got launched, right? And we have been able to solve UPI using UPI Mapper as an enabler for the insurance industry to settle, or the NBFCs to settle a lot of unclaimed funds, right? So that has been a huge impact for us. So if you look at the entire direct benefit transfer, right, with Aadhaar payment system, we have seen a huge growth in terms of, the turnaround time reaching the exact beneficiary, right? So I think if you just look at all this, right, the DigiLocker came into play. We are talking about, Aadhaar really helping us to drive the KYC aspect in a big way. I think that has really helped from a banking standpoint.
Right, Sunil. Thank you for that really good thought. And I think picking up from what you just said, a lot of work is on the access to finance as well. I'm picking bits of what you've said. So if you look at access to finance, a lot of, not only DBT, but the SMEs, MSMEs have also picked up a lot of benefits out of it. Sundeep, some thoughts from you on this about?
Yeah, thanks, Aditi. So the benefits to the SME, I'll come to as a second point. The first point is the fintech industry. The size has grown because of digitalization. Me, you, many of you have got glorious careers post 2013 ILFS crisis, courtesy this. So actually, it's impacted everyone's life. Must compliment for the regulator and the regulations to support this ecosystem. Another connected point with the first point is the DBT, which we have just discussed about. The reports and the impact have started coming. The poverty in India has gone down much faster pace than in this decade versus last decade. And one of the primary reasons is because the money is reaching in the hands. So the impact of all this digitalization has started to reflect on many of us as one of the points. And then the inflation that we are observing, that during the corona time, the underprivileged were offered wheat, rice, etc., more by barcode or QR code, and not the money transfer which has happened in other countries. As a result, again, the inflation is not impacting us. And again, this is also one of the reasons for inflation not impacting like it's impacting in other countries. So these are far and many impacts that is helping the entire country. And like I said, the results are reflecting on us now. For the SMEs, one statistic which is directly connected with me as an entity, which is a trades entity, I'll just reflect is, in last 5 years, we have disbursed 1,80,000 crore worth of receivables for the SMEs, 60,000 SMEs, 1,600 cities, using trades. No one has visited any office, no one has visited any bank. Sitting from their office in 1,600 cities, people have got 1,80,000 crore worth of invoices discounted. And then we were just discussing on the lunch table, out of this 1,80,000, 90,000 crore has happened in this 1 year, 22-23. So that's the impact of digitalization which is impacting.
Yeah. Correct. Right. I think from there, I would really like to understand from Sahil. Sahil, you've been really vocal about a lot of impact which public goods have created. So from a fintech, from a technology standpoint, do you really think that we've pushed to the edge and we've really been able to benefit, or there's a lot of ground to cover more?
I think that question is a no-brainer. I think we're just getting started. It's very clear, even when you look at penetration numbers, 300 million is a big number for anybody, but for India, it's still barely 20% of our population. We are, 1.5 billion people. We're still a very poor country. Our GDP per capita is somewhere between $2,000 and $3,000 per annum. Per head, which is less than a quarter of that of China, which is the lowest still among any of the BRICS countries. But we're on the right trajectory. I think I've always said this: for India to grow, our access to financial services, our access to credit, to insurance, we are still deeply underpenetrated in all these aspects. So one thing that I'll kind of look at is, if you come back to first principles. The first thing that India needs is more accounts, more loan accounts, more brokerage accounts, more insurance accounts, more, and not by 10, 20, 30%, but I think we need about 10x more accounts than where we are right now. And so one of the main things to solve for in the years to come, while balancing, of course, the risks and regulations that are required, is how do you enable KYC in a more seamless manner? And I think that's a very core question for digital public goods. It is still born with a lot of friction. It still has a lot of scope for even more adoption of technology, and I'm sure the regulator is thinking about that very actively, and I think they understand that at a very core level. The second piece, of course, is salaried individuals still make up a bulk of a lot of the personal loans that happen in this country. The other part, since we're talking about an equitable payment strategy or an equitable strategy for using digital public goods, workforce participation rate for women is like less than 10%. And you see that reflected in the number of women getting loans as well, women getting credit, except for those specific programs that are targeted at women. If you look at the bulk of the books for retail books in both banks and NBFCs, there is a severe underrepresentation for them. So I think once you enable KYC, how do you enable effective underwriting for people? I think the account aggregator ecosystem that Sunil and Sir touched upon are going to play a major role. But again, there's a lot of adoption work that is required. There's a lot of building work that happens on top of that. And finally, I think the third piece is you're talking about a population which is still coming to terms with digital literacy, which is coming to terms with operating apps and these kind of things. It's still new to a truly population scale. When you're talking about that scale, we barely spent half a decade in this paradigm. And so I think the idea of enabling good defaults, and I'm not talking about the loan defaults, I'm talking about the default settings, the default behavior that is there. I think that goes a long way. So recurring payments, for example, and mandates, the old way of doing mandates is slowly evolving. We have UPI autopay, we're enabling more ways of kind of making that happen, but making good financial behavior easy. Not something that someone has to work for, but something that is programmed as the default behavior so that they're rewarded whenever they engage with the formal financial ecosystem, using, be it through the evolution of auto pay or be it through newer payment schemes that come through. I think there's a lot of work, and some work is already happening, like plugging in. Just yesterday, the RBI came out with a notification that built on Governor Das's comments in the Monetary Policy Committee meeting, where credit can be now linked to UPI, and I think that's a big piece. So these are the steps, I think, which will go a long way in increasing penetration across the board.
Right. But I think from a very fintech standpoint, Sonika, I mean, you have one of the typical situation of being a big tech, has a good platform, enough of reach, but on the other hand, you also have a public infrastructure and a public good product which you have to also adopt, which is going to obviously benefit. So as a fintech, how do you marry this and how do you reach to your customers to get that benefit across?
So I think, kind of just reiterating a couple of things that the others have said on the panel. I think India's digital growth story has been incredible, and I think something that is unmatched anywhere else in any other country. And I think, underpinning that is a lot of the stuff that has been built that has kind of led us to where we are today. So the whole India stack, starting with the, how do you manage your identity, how do you manage data, how do you open accounts, and all of that, and led to the UPI moment that happened. But I think at the end of the day, what is critical is that the people have to adopt the service and they have to try it out. So from a fintech perspective, where we are thinking about that, okay, how do I take this to the end customer, right? At the end of the day, you're thinking about that, hey, I can take the horse to the lake, but how do you make him drink the water, right? So I think there are a few tenets on which this is predicated on. I think the most important one of which is how do you build a product around trust? And financial products and financial services are predicated on trust. And building trust in services that are new essentially require you to incentivize people to try new products, right? They have to come in. And then when they try something, they have to see that it's a reliable service. It's something that will work for us every time, right? It can't happen that one day this works and the second day it goes down, right? So building financial products for scale for a digital economy that is, and at the scale at which India is today, right? It rightly said, it's right now only hitting 20% of the population. I think it requires, at least from a fintech perspective, the idea is that you have to really invest in customer experience. You have to really invest in making people trust the products that they're using. And that's how they will, because if you think about it from a laborer's point of view, a person who's earning 200 rupees a day, 300 rupees a day, but is still using now the UPI rails to maybe recharge their phones, maybe pay for a good or service at their local store. They are doing that now because they trust the system, right? They have an account, they have an Aadhaar, they have a system to use it on, right? And I think that's incredible in terms of how we have been able to scale that. But the large part of the work is still ahead of us. And I think from a public good perspective, I think the word that is critical there is good, that the service has to be good, right? If it's not good and if it's not reliable and it's not giving the right experience to the people, then it'll just fall away. And there's no point in saying that you'll have free electricity for 24/7 and just supply it for 1 hour a day. That model doesn't work. So I think that's how we'll have, as from an ecosystem perspective, I think that's how we want to think about it.
Right, thanks.
If I may just add, right, to digital public good, right? If you just look at logistics for that matter, right? A combination of FASTag, right? You're talking about the e-way bill plus the GST, right? Has really simplified commerce today in India. We're talking about the truckers going from one state to another, right? You're talking about the GST bill which is being used, right? And the e-way bill, right, for financing, again for the MSMEs, right? It's a big way forward, right? We are talking about APIs and connected banking as well, right? Which is really powering the way how we are interacting with each other, right? I mean, case case in point, I mean, PhonePe and SETU both are our partners. If I have to look at PhonePe is really, has the real big market share. We are partnering with them using the APIs, right? We have been able to onboard almost 20 million merchants. I mean, not onboard, i.e. registered, right? Merchants in 7 days time. I mean, we are talking about, that's the power of APIs, right? And that is really helping us to leapfrog in terms of, where we are when it comes to public goods.
Very right. So Sunil, right in the same thought, if I could request you in brief to give us a little more insight from your experience on the global trends which you have seen. Like we were talking about lunch table that you've handled a lot on the Apex side. So there are a lot of learning across outside India also which we can bring in. So if there's something which you could kind of share for the audience here.
I think if you look at, I mean, India has made a lot of progress, but if you look at some of the best practices, what we have seen, let's take an example of Singapore, right? You have NRIC as the single source of truth. It's the single identity with which, every dealing is being done by an individual, or for that matter, even corporates as well. You have the LEI for corporates. But if you look at India, right, you have Aadhaar, you have passport, you have voter ID, and it kind of, is interoperable, right? So how do we make, if Aadhaar is really the gold standard, then how do we make it really unique, right? Because today, again, all these documents are being very interchangeably used for various services when we talk about public goods. So I think having one single unique identity, right, would be really helpful. If we are talking about Aadhaar, then let Aadhaar be the single unique identity. Of course, you will need passport for cross-border travels and all, but I think that would be useful. The other is how can we leverage LEI, right? I mean, the LEI concept has come into play. If you look at Hong Kong for that matter, right, they have eConnect Trade, where they are using most of these information via blockchain for open account trade, and it is simplifying both export-import exchange of information, right? So can the LEI be used, right, in an Indian context, right, to simplify a lot of A1, A2 remittances that are happening on the corporate side, right? Look, we have solved a lot for the individual side, but there's a lot of work to be done on the corporate space. The digitization has been more beneficial to an individual, but I think when we talk about the MSMEs and corporates, I think there's a long way to go about. The NUCC, which is equivalent of NPCI in China, right? They have been able to reach out to the last mile. I'm not saying India, I mean, India has done fantastically well, but I think there are some learnings which we can look at in terms of how they have been able to penetrate even into the last mile, the countryside, to drive digital financial penetration. So those are some of the best practices I could recall.
Absolutely. So, Sahil, I think I'll bounce this question back to you now. Like, there's a lot of learning which we've got. There's a lot of in-house, ingrown elements which we have done. Like, if you talk about digital infrastructure for verifiable, open evidence. In that, in DIWOC, there are some very, very specific challenges. So, as a technical service provider, do you face such challenges? As a fintech also, do you face such challenges going forward which others are not facing? So maybe outside India they are not facing, but we are specifically, being so demographically diverse, geographically diverse, which you guys face a lot in your day-to-day lives.
It's a good question. I'm wondering if I know enough about the challenges that other people face that I can answer this question honestly. I can only talk about the challenges that we actually end up facing on a day-to-day basis, and hopefully those in the audience that are more informed among me will be able to differentiate those are India specific than and those that are probably not. What I can say is, see, my reason for doing this comes from, I was part of the early team at Aadhaar, I was part of the core team at India Stack. It comes from an almost very old school way of thinking, saying that it is incumbent on the best of us, and I consider myself deeply privileged, firstly to be a man, secondly to be educated in one of the best universities of the country, and to be born into a family of reasonable means, that it is incumbent upon me, upon the best of us, to build for the rest of us. And so when you start thinking about it in a systemic standpoint, you start thinking about, I had dreams, honestly, and the dreams were, India is a country where sachets work very well. where small size products, because our purchasing power isn't significant. In fact, most of the shampoo sold in India is actually in sachets. About 60-65% of the shampoo sold in India are in sachets. In fact, if you actually work out the unit economics of a sachet, they're cheaper than actually buying shampoos by the bottle. So, for those of you who are really frugal, if you buy 1 liter of sachets, it works out to be about 25% cheaper. The same kind of maths applies to financial services if you are able to solve certain core things like how do I solve for KYC? To me, one of those core questions comes back to that, because every time the same person goes to a different financial institution, they have to prove that they are who they say they are again and again. In fact, sometimes within the same financial institution, you'll have to prove yourself a couple of times over, because the systems don't talk to each other the way they should. And I think the second aspect of the cost of that account opening makes it prohibitive to make small products. The second thing is to make products, to design products. Now, let's say I want to design a one-day loan, loan tenure, which is actually the loan tenure that is there for a vegetable pushcart vendor. They borrow every morning, they buy stock, they sell, and based on that cash, they rotate that cash on a daily basis. And the interest rate charge there is, if you're generous, it's about 1% flat. And when you compound that on an annual basis, that's 365% interest on that particular little amount that is being rotated. It's absurd when you think about it. So, yes, there are of course challenges, like, I can sit and talk about my specific trade challenges, the bane of my existence is InfoSec checklists, which don't really make, a lot of which, I disagree with fundamentally, saying this is built from, Siebel systems era, or from, when most of the stuff was on-prem, it has not moved significantly, all of that. But those things, they move with a certain speed, and wishing them away is not going to make them go away beyond a point. That's financial
Trust
services.
me, they don't go away for sure. And I'm sure Sundeep can talk a lot about it, that, MSMEs and small businesses also have some. So same problem as he's saying, that probably a loan which costs you a percent, and then if you accumulate it over a year, that's a very heavy cost to pay. So you think that this kind of challenges can be solved by DPGs together?
Yeah, so Aditi, I'll tell you, I'll take a connecting thread from what Sunil left. A lot of work has been done on the B2C side, okay, with the India stack and everything. Now on the B2B side, fintechs like us, maybe Treds, we bring a lot of opportunity for the financial institutions, which is SME opportunity. Now comes the point that fintech should be able to bring speed, that means availability of finance to the SME on time, then at the right price, and then without giving a limitation factor of his collateral, right? Now, the collateral limitation factor, yes, we've solved to some extent. Cash flow based financing has started happening. Courtesy, this availability on time, that means the speed, is something that we all have to work upon. And something what you are asking is that what we are doing is onboarding, bringing everything on the table. Very good. I mean, so like I said, financial inclusion, 1600 cities, SMEs logging in, very good. Now, if I log in the case today, am I able to give him the financial money which he needs for his business or for his order in 1 day or in 1 month or in 3 months, right? So what does it need backward to do that? Is that use this financial acumen and the digitalization for faster turnaround in terms of processing the data internally in the financial institutions, whether it's a bank, whether it's an NBFC, whether it's an insurance company, anywhere. And once that increases, then look at the power that the speed of reaching money for the business when it needs actually will go up multifold. And that's when he'll actually use it, because he's getting funding at a right price versus he's going to borrow at 24% because that guy can give the money today. And the FI can give him money in an X period of time. So if we can crunch this time using all the means that we have now generated, that'll have a lot of impact.
Right. So, sir, I think I'll from there to what the regulator can support to make these challenges. And Sonika, I'll come to you as well, that there is a lot of need for the regulator to support there are many steps to be taken from the government to be done. So sir, any thoughts on what more can be done or what we are already doing and is in progress for all the ecosystem participants to take it forward?
So let me start with actually the KYC. So why is actually KYC important? Now we say that KYC is a slight friction for onboarding of customers or actually public. But the same KYC, the lack of the same KYC also result in actually people not having confidence in the system when you look at actually fraud or something happening and the people lose confidence in that. So that's why KYC is important. I take the point that actually, yes, there are certain things that you end up actually doing a multiple time KYC. So I think there are efforts on to solve that particular problem. Now, coming on to the credit and actually the availability of data, already there are some systems actually which are there, which are in existence actually, which I feel like Threads, which is there, and I feel actually the BBPS and some other platforms. Over a period of time, actually, there would be sufficient data from this to enable actually a small customer or an MSME to get credit. So there would be actually the credit assessment could be made easy by these channels over a period of time. Maybe actually now these have not been channelized properly, but we need something where you can actually channelize this. But this will actually get built over time. This is one. Then as far as actually plugging the making or plugging the gaps or customer enablements. Actually, if you're there was a mention of the circular which we issued yesterday on credit on UPI. This is one actually which we feel that it's going to be it's largely to the customer, the last mile connectivity in credit and the use of actually by customers of credit and also the financial institutions issuing them at a lower margin of the cost at which they do the credit link payment systems now can be enabled. So we feel actually we are looking at the market, and as and when we get the feedback or what we get, we try to build, we try to facilitate that. So all feedbacks actually we do welcome. And
well, then that's a good opportunity for you to definitely say, Sonika, that what all more can be done, and does this really help or not? I mean, I think you've got the right question for you right now.
No, I think, see, it's a journey, right? It's a public-private journey, and I think the model is evolving as we go. And I think one of the things that I think we've been reiterating again and again, just coming back to the question of scale, right? And the scale of India. And the fact that, we are at 10 billion transactions today, and we are looking to rapidly increase that over the next couple of years or several years now. I think the one thing that we would want to continually kind of keep in mind is, as we want to take these products, financial products, credit products, payment products, insurance products, any of these, at the end of the day, you've got to get them to the people, providing access. That is the first principle of a public good. You have to give people access. And it's not just about making something available, it's about making something good available for them to have a reliable, trustworthy service. And I do believe for that fundamentally that we need an economic model framework that will allow these things to scale, because the ecosystem needs to be continually investing and growing. And without that investment of getting people in to try something, at the end of the day, so many people have come in and are doing digital payments, are creating their identity, are doing all of that, because it does start at the end of the day with the cashbacks. You do have to incentivize people. You have to tell them, come, try this out, see how it works, right? And if they like it, and they think that it's reliable, and they start to trust the product, they start to trust the services, they will build up on it. But we do need to bring in a huge segment of the population still into it. And if India has to become a 30 trillion economy, there is a large section of the population that has to be digitized and has to be brought into this fold. And I do believe that a strong economic model and framework around it will be fundamental to the growth of this model.
Yeah, so hopefully that with the insights we have today, we'll be able to craft an equitable strategy as the topic suggests. In the interest of time, I think we'd like to wrap up. And if there are any questions from the audience, we'd quickly like to go around and get it.
Hi, my name's Jinit. I cover banking for moneycontrol.com. So last year, regulator kind of highlighted that in the digital payment system concerning UPI, there's a duopoly happening. So basically, dominance of a couple of industry players. So wanted to understand how is the regulator looking at that in that perspective, and how the industry players are also looking at those things. If you could highlight.
The dominance actually of the two players have happened because they were the first ones who were taken up. And I think actually I need to say that they promoted the growth of that also. So I would say there are actually lots of entities who are coming into the space as and when actually innovations and just since you asked us actually, see, the view, I think actually the last data which I've seen, there are around 600 million smartphone holders in the country. But the unique user number of, UPI is still very less. It could be in the range of maybe 300 million or 250 million in that range. So you have smartphone issues itself actually quite a lot. Now then you go on to the, the feature phone issuers. Now, NPCI has actually launched a feature phone product. I think actually some more are in the line. So you have a lot more customers actually who needs to be brought on board, and there is actually space for a lot more to come. It's not, though existing, they are the duopoly. I don't think actually going ahead, they will continue to be, but only thing is that you need certain innovations actually to come in, and how they capture the market is what we're looking at.
See, I think from a industry perspective, I think agree with what sir is saying, that there is a lot more to, like large sort of customers to be brought in. So I think the playing field is open for innovation. I think as and when people come in, I think from a PhonePe perspective and from a fintech perspective as well, I think what we are looking at it always as from a customer lens, and if there are customer cohorts that we can look to bring in sustainably into the ecosystem, that's what we want to do. Because like I said, it is, we are sitting at only about 250 to 300 million customers today. We're not looking at it from an angle of, that you're grabbing something. It's more about saying that, hey, how do I bring this payment, this service and this product to the largest number of people who can benefit from it? And that's why I said that going back to the point of that having an, economic model and a framework will incentivize innovation as well. Because that is the, for entrepreneurs to come in, for people to invest in these products and services, they need to understand and see a way to, sustainably grow their enterprises as well. And I think that will lead to innovation, as I was saying.
I have one question, if I may. This
Yes,
is on
please.
behalf
Yes,
of my
yes, of
team,
course.
sir. So this is for you. I think a lot has been spoken about, KYC, and so one of the thought process, right, was like we talk about when we talk about public goods, right? We are talking about DigiLocker, right? That's also another public good, and while DigiLocker has gone to an individual today, he can store his digital certificates and all. I mean, is there a thought process of how that can be extended even for corporates, right? Today, corporates can leverage on the DigiLocker mechanism, to store their board resolutions, to all their KYC documents, which can become very interoperable, right? And then the banks, at least the regulated entities, can use that information to really leverage that, and the legwork that is really required on the KYC can be minimized. Any thoughts around that, sir?
See, I would not be able to answer because I don't actually come from that particular area. But yes, DigiLocker has actually taken off whether corporates can build up. I would actually think why not. But I'm not the person actually, comes from another department, so I would not be able to say what is the process, what they are looking at.
Oh, thank you, sir.
Thank you so much. On that note, ladies and gentlemen, let's give them a big, big round of applause. And thank you so much, Aditi, for that excellent curation.